I couldn't get like some of the posts to show up.
Yeah, I think it was the Cloudflare thing.
Yeah. Yeah. Whoa. Hold on. Let me make sure everybody gets in here. Come here, buddy. Okay. Look at these.
There he is.
Hey, sport. Hi, can you say hi?
Oh, hey, Colt.
Hey, buddy. I love you so much.
Getting ready to be a trader?
I mean, do you think trading will be around when we're
Who knows? Who knows? Yeah, who knows?
Like I wonder about that. I'm really not sure. There's like everything changes, but who knows? All right, let's get this party going. Let me invite everybody in. Invite. Yes, don't be pulling any wires, Batu. He's been, right. He's at that spot where it's like, oh, wire, let me pull it. Let me pull it. All right. Give me 1 second. I have this outage as if logged me out of everything. All right, let's roll. I think we're in the game. So, first of all, what is going on? How you been? What you been watching lately? Give me a little rundown. Oh yeah, you can. Do you want to share? You can share your charts first. Let me see here. Why don't you do that?
Are you talking to me?
Yeah.
Oh, okay. Okay. So let's see. What are we on? What are we on right now? Is this?
This is like Restream. So yeah, if you go on the bottom, there should be like a chart little thing. Do not pull anything, Batu. If not, I can just pull up whatever you want.
All right. Is it showing up now?
Yes.
All right. Good.
Good. All right. Good morning, guys. What's up? Hey, I got Paul over here helping out today. We're going to be talking about the markets, and we got NVDA earnings and all sorts of just nasty stuff going on. So Paul is going to be digging in here and giving us some thoughts on the market. So Big Paulie, for those of you guys that are not familiar, Paulie, I've known him now for 20 years. He is the one that originally coached me on swing trading and day trading. And the reason that we have so much problems with TC2000 customer service is also because of Paul, because he made me use it. And now I'm forcing you all to use it. Paul, the number one question I get in class is never about stocks. It's like, why is this thing so hard to use?
Yeah. No, you know what? I think it's user friendly. It's just there's always some little issue, but at the end of the day, there's no perfect trading platform. We've tried them all, right? And there's always something with all of them. Anytime I've tried to go to something else, I always go back to this. Part of it, I think, is the way I've trained myself to look at it is on the TC2000. Big week this week. We have obviously the market's in a little bit of a panic now, and it's always funny, these things come out of nowhere. The big kind of pullback the last few days is because of everyone, this talk about valuations and AI and all that. We were at the same spot last week, but all of a sudden the fear is there now, and this is kind of a regular kind of occurrence for the market. I think we're old warriors. We know that we've seen this happen a million times, right? And this is really kind of a nothing deal. If we look at SPY overall, I mean, we're just pulling back here to the 9 EMA, which is pretty much standard. So not really a big deal, but it is a big news week. And I think we are kind of in an inflection point here, just barely hanging on to essentially the trend we've had since, or not 9 EMA, I was looking at the weekly, right around the 50. But we're at an inflection point right now, and this is a big week. We know now there are a few stocks that kind of everyone's watching in the market. NVIDIA is one of them. We have NVIDIA earnings coming up. The Fed minutes, I believe, are released this week. That's going to be big to see what happened behind the scenes, because everyone's worried right now. We didn't get the numbers during the government shutdown for some of the economic data, and there's supposed to be a December cut. And part of the big reason SPY is where it is right now is because of the expectation of this cut. So if we see the Fed minutes and maybe there was a little more concern than we expected, that could send the market down a little further. And then the next 2 weeks are a big week for retail earnings, and everyone's worried about the consumer right now. So a bunch of retail stocks reporting this week and next week. Just this morning, Home Depot posted some concerning earnings, and that kind of relates to housing and retail because, housing, generally Home Depot's doing well when the housing market's doing well. And if we pull up Home Depot this morning, we can see.
You got like some Google Doc up, not your chart.
Oh, it's not going. Okay. Well, Home Depot is Home Depot's getting hit a little bit this morning. Do you guys trade stuff? Do you guys day trade stuff when it's gapping down like this on something like earnings?
Yeah.
Yeah.
I mean, usually not the day of the earnings. I mean, if it's the day of the earnings, we'll usually trade with the trend. Like if it breaks the opening range to the downside, then we short it.
Right.
If it's like, days later and it's like trying to fill the gap, then, we would, be.
What I've found with a lot of these things is they tend to be overreactions on earnings.
Sure.
So, with our swing, we do. And sometimes the swing can transfer over to day trading. But I always look for the overreactions on these things and potentially trading the reversals.
Okay.
But at any rate, we have a big move down here, and I don't think that's good for the overall market. And then, of course, tomorrow, everyone's going to be watching NVIDIA. And as swing traders, it's, this Kunal, we had the way back when one of the hard and fast rules was when we're doing our short-term swing trading, we don't hold through earnings, right? Which kind of sucks because sometimes you love a stock, but earnings are coming up and either you can't trade it or you're in it and you're in profit and you have to get out of it. So what I do with this is, first of all, with my standard equity swings, I rarely hold through earnings. If I'm sitting on a big profit and I've mitigated some risk, maybe I'll gamble a little bit with a little piece of it. But generally, we don't hold through earnings. But there are a bunch of different option strategies that we can use that allow us to essentially, I wouldn't say gamble a little on earnings, but we can play through earnings.
Sure.
And I'm going to go over one of those ways today. We have the options class that's starting tonight. And what I'm doing with the options classes and past options classes, or what you see in most options classes, they teach you a bunch of these strategies, but then it's like, what do I do with it? Because
an
option strategies, which one do I use? How do I actually use it? And that's what our focus is going to be on. Like, what are the strategic ways to use these different option strategies? So a number of people here who have dabbled in options have probably heard about straddles and strangles. And have you ever traded those, Kunal?
No, I'm a man who likes to just pick a direction.
Yeah. So you know what they're about. So that's essentially it. A straddle or a strangle is essentially when we're trading, we're saying the stock is going to go up or it's going to go down, right? And the problem with earnings is we can know, okay, I think NVIDIA is going to be volatile. Everybody's watching it, right? If it doesn't hit its estimates, there could be a big gap down. If it meets its estimates, maybe there's a gap up. Right now, NVIDIA has been in the news because a lot of the big guys, the big names over the weekend, it was reported that a lot of these guys are reducing their positions in NVIDIA, which I think that's part of the reason the market's a little concerned. Why are these big guys getting out of some of these big tech names right now? So there's a good chance, not 100% chance, but a good chance it's going to be a very volatile move, but we don't know the direction. And so if you don't know the direction with standard equity swings, it's hard to trade. But options opens up a whole new world of trading where I can look at something and say, I don't know what direction it's going to go in, but I have an idea it's going to be pretty volatile. So I could think, okay, it's going to break outside of this range, but I don't know which way. And that's where the options straddle and strangle come in. So with NVIDIA, we can enter a straddle going into earnings. And it's pretty simple to do. All we're going to do, for those of you who know a little about options, all we're going to do is buy a call and buy a put at the money. So two different option contracts, one call, one put. We're going to buy them. Same strike, which is going to be at the money. So if NVIDIA is trading at about 184 right now. We're going to buy the 185 strike. This chart here I did over the weekend, so it was trading at 190 at the time, so we'll just go off this. So assume it's at 190 right now. So we're basically buying a 190 call with a strike right after earnings. So I did this one, I think, on the 5th of December. So about a week or two after earnings. Buying a call, buying a put, same strike, same expiration date. Now, once we do that, we have what's called a net debit, which is essentially the cost it was for the call and the cost it was for the put. We're going to add those together. That gives us our net debit. All you do is divide that by the stock price. And here we were getting 7.8%. So this is the market is expecting an implied move of 7.8%. If you look at the profitability chart, that's about where you start getting profitable on this thing. And notice here, this red we see is basically the range. If NVIDIA was to close within this range, we lose money. If it closes outside the range, we make money. And the more it goes outside, the more money we make. And what I like to do is I've already decided that I think NVIDIA is going to be pretty volatile going into this earnings. And I'll take the last 12 to 16 earnings. So essentially the last 3 to 4 years. And I'll just look at the moves that it has made post earnings. So you can see there's a bunch of these that were just not kind of nothing moves. Last time it was 0.88% down, 2.8% down 4%. But there have been plenty of big moves. And when I say big move, more than what the implied move is. So the move is 7.8%, where we start getting profitable, like really profitable. So you can see here, there have been 1, 2, 3, 4, 5, 6 of the last 16 times we had big moves. And that's enough, if I'm just looking at past history, to know that this stock has the potential for being volatile. Notice also, I don't care if the move was an up move or a down move. Whether it was minus or plus doesn't matter as long as it was a big move. So what's going to happen is you're going to get a lot of reactions when you do this that are kind of nothing moves. They're duds. Maybe it ends up being up or down 2%, and I lose or make $100 or $200. No big deal. And that's the nice thing about this. Normally, when you hold through earnings, you're taking on a lot of risk, right? Because it could gap down 20% and then you're getting crushed. We don't have to worry about this here because we're pitting a call and a put against each other. So that's limited our risk. So what you want to do on this chart is go to the 19th on the day of earnings. And you can see here, the most I could lose on this thing is about $222 if I'm just doing one contract. Of course, if I was doing 2 contracts of each, then it would double, minus 400 and so on. But you can control that. So I know now if I held to expiration, it would be minus $1,800, but we're not holding the expiration. We know we're going to get out fairly quickly. So essentially, the most I can lose on this thing is $222. And the only way that happens is if the stock stays exactly at 190. If it goes to 195 or 181, I only lose here minus 28, minus 155. So it's not even that likely I'm going to lose minus 222, but I know, okay, that's the most I can lose. But now, if it makes one of these big moves, like a few, 6 earnings ago, it was up 13%. And if it goes up 13% this time, I make $839 on only $200 of risk. It made a 23% move 9 quarters ago. If it makes a 23% this time, I'm going to make $2,400 on only $200 of risk. That's the beauty of this. Risking very little, just putting a little money in, and the potential for a big move. Make sure you're disciplined on this so you get out quickly. Don't keep holding and holding until you lose $1,800. But if you get out quickly, you're risking very little on these things. And again, you're thinking kind of long term. I'm going to do this like 10 or 15 times, and 1 or 2 of those times are going to hit to where I make one of these, on $200 risk, I'm going to make $2,000 or $3,000. And on a lot of them, I'm going to, they kind of balance out. I'm going to make 200, I'm going to lose 200, I'm going to make 100, I'm going to lose 100. That's fine. You kind of balance out, but then you hit that big one and you get these outsized kind of gains here. So really good way to play through earnings here. Gamble a little bit with really small risk here. So I know going into NVIDIA right now, I'm only going to lose potentially about $200. And that would be if it stayed exactly at this level. But if it gaps up big, I could make $2,000, $3,000, $4,000 on just this small little risk. So one of these amazing things with options you can do that you can't do as a standard equity trade. And another one of those things you can see here where
Now, Paul,
you hear all these.
This thing's a dog, right? Like, you think it's still going to gap up?
NVIDIA?
Yeah.
But
if
I was guessing, I would say no.
Like in the current market conditions,
unless it really surprises.
Like it's a pig, right? At $5 trillion, like how much is it gapping up now?
Right. But the great thing about this for us is if it gaps down, that's really good for us too, right? We're not picking direction.
Yeah,
we're not picking. Yeah, no, but we're not picking direction here.
That's
that's kind of the beauty of it. Is if it's a dog, that's great. You know, if it goes down 20% or 15%, we still do very well on this thing. So we don't care about the direction. If it doesn't meet expectations, which could happen, it's probably going to get hit and we profit. Sure. If it surprises everyone and it beats expectations, again, we're going to profit. The only way we don't profit is if it's kind of nothing burger and there's no volatility. But even if that happens, I lose $200. So what, right? I have a potential for one of these really big gains. So that's the beauty of straddles and strangles. Don't have to pick direction. I can risk very little to gain a lot here.
I got you.
So that's the idea here. So whenever you do one of these things, look at the history of the stock. You know, out of the last 16 times, has it made big moves like 5 or 6 times out of that last 16? If it's done that enough, you have the odds in your favor to potentially hit one of these big ones. And then we'll profit big on them. So I've been doing this a lot during earnings season, and it's been doing well so far. I think, I've had a lot that have kind of broke even, lost a little, won a little, but every once in a while I hit one of these big ones.
Okay. So you spread it around. If you get stopped out, like lose a couple $100, mm-hmm. then you hit a big one and it pays for essentially
much more than that. Yeah, the big ones will much more than pay, because what's going to end up happening is you're going to, like, a lot of your nothing burgers, some of them you're going to win or lose them, so a little, some you're going to win a little, and you kind of break even on those, and then you hit the big one.
Gotcha.
So that's what we're doing with NVIDIA. Safe way to play it. And you get some skin in the game. Otherwise, you kind of have to sit back and just watch, right? Here, you can have a little something on it and potentially hit big.
What are you playing besides this? Give me a rundown. Like, what's going on in that little head of yours?
So we've been pretty cautious right now, actually. I know it sounds a little cowardly, but we've been a little cautious. I think, the thing with swing trading is you have to know when to, like, hit the gas and when to kind of slow down, right? Sure. And since things have slowed down, we don't have an edge right now. We do have November and December seasonality. These tend to be back here. I think in the swing group here, this is pretty much what we've been saying is we're waiting for this week. And then Thanksgiving week tends to be really strong. There's an edge around Thanksgiving as well. And we're looking at specific industries. Industrials have been very strong. I know industrials can be a little boring to trade, but some of the industrials have been moving more like
Caterpillar types.
I mean, look at Caterpillar's chart. It looks like one of the big techs. I mean, it seems kind of boring to trade, but look at the chart here. If we didn't know this was Caterpillar, this looks like one of the big tech charts, right?
Yeah, there's so many stocks like this where you're like, oh shit, is that a software?
Right, like you look at it and go, I haven't traded Caterpillar in years, but look at it now. So, and that's part of swing trading too. You got to know where the money is flowing. And whenever you see money outflowing out of an industry, it's probably flowing somewhere else, right? So we are seeing a move out of tech and into industrials, and we see this big movement. Caterpillar is a good example of that. You can look at XLI. An easy way to do this: take XLI, and then just pull up XLI, and you'll get a bunch of stocks in here that are industrial stocks that you can look at here. Defense stocks have been really strong recently. This is historically a really good time for retail stocks. With Black Friday and Christmas shopping, retail always does good into the end of the year. There are some concerns about the consumer, but a number of the retail stocks have been picking up, especially apparel and some of these discounts type stores. Like look at TJ Maxx, another one that's kind of you wouldn't expect to be moving like a tech stock, but kind of discount apparel. And you can see here, look at this chart.
Indians love Marshall.
Right, Marshall's TJ Maxx. So TJX here, this thing's at all-time highs right now.
In big
so some of these retail areas, industrials, maybe some areas that we like to be in tech, and but some of these areas are moving like tech right now. I'm still watching. The one thing about these energy plays, we know they pull back deep, but once the pullback's over, we can get some strong bounces.
Sure.
So I am watching some of those AI stocks, some of the energy plays. Here's Oklo here, one of the nuclear energy plays. It's pulled back a lot. Yeah, it's pulled back from 194 to 93, but it's still within the context of the big trend. So at some point here, this thing is going to find support. It may not ever get back to this level, or it may, who knows, but we will get a strong bounce to play eventually. So I'm still watching these as well. Another phenomenon that tends to happen is window dressing towards the end of the year. The momentum stocks, the small caps that were doing really well tend to be strong towards the end of the year. So if we're thinking of some of the seasonality things, we can, I have those on my list right now. I'm not looking for entries yet, but if they start to show me something, we'll go towards those areas as well. And same goes for big tech. And some of the big techs are showing relative strength. Google is showing a lot of relative strength here. While a lot of stuff has been pulling back, Google is still near the all-time high here. And I think this weekend, I think everyone liked that. And I think that's why it gapped up yesterday, was Buffett took a bigger position in Google over the weekend.
Hey, let me ask you something. In this type of market conditions, oftentimes you may see a lot of failed breakouts. Do you kind of incorporate, some of that? Just knowing that the market itself is probably punishing strength in some manner?
Yeah. So we can use failed breakouts for a couple of things. One is to give us a clue that the market is weak, right? And maybe we want to be a little more cautious. And that's part of the reason, no entries over the last couple of weeks, a week and a half. Also, one of my favorite setups is shorting a failed breakout. So especially
for example, if this rips through and then you're like, burr.
Right. The best thing to do is trade value right now, buy dips, right? Dips to support rather than breakouts. If you're looking to short, one of my favorite plays is say this is an all-time high. Stock was like this, it pulled back, it's broke out here. Sure. I don't like to predict up here, but it's a very simple trade. Just if it closes below the old high, you have your quick short here. Because what happens a lot of times is everyone has their stops under here, right?
Yep.
And when it comes back below this level, the stops get hit, and you get this flush down here. So this is a good spot to be short. If you're looking for shorts, this is a good spot to be shorting when you get that failed high breakout in here.
Nice. All right.
All right, so I know you guys have to get to your day trading now, about 10 minutes before the market open, right? And I'm going to get to some of my stuff too. What are you guys looking for day trades right now? Do you have a go-to list?
We've really just been shorting, and we've been shorting mostly for days, but some of these have been good bleeders, for just daily shorts, especially while Bitcoin and Ethereum are taking big shitters. We've been taking this one down. I've been in a nasty war with Palantir for the last few days.
Yeah,
it never.
I'm holding this. This is one of them that I am holding on a swing. So, and it hasn't really broke down yet.
It hasn't. I keep waiting for it. I've been fighting it.
It's holding Friday's kind of reversal candle. So until that breaks, I think we're okay.
And then basically just all these old turdy kind of momentum names have been pretty much every spike they've been getting faded off. But I think that's probably closer.
Since you pulled up RGT, we were talking about the big pullbacks here, and notice you have the line set up. That's a good spot. That's a good spot right there.
I'm watching this one somewhere between here and here. It should gain some traction.
Maybe a tradable kind of reflex bounce.
Yeah. I mean, I don't know if you ever use this, but I've personally noticed that if you get say a stock is dying, if you get 3 or 4 days worth of ATR, so this average true rate, So if you get 3 or 4 days worth of ATR between like where price is and the 9 EMA is, and you hit like a longer term moving average, like you usually get a really good reflex bounce.
Right.
Because I mean, if you have 4 days worth of ATR just to get to the 9 EMA, I mean, that's like a lot of upside room.
Right.
So I
All
think
right, so
to flush down, I think then you've got a potential like a lot of room before you can run into any supply.
yeah, right. Well, we have a pop-up session in the swing starting in about 10 minutes, so I'm gonna get out of here.
Hey.
And remember, if anyone's interested in options, you can email me or get a hold of me, and then we have that class starting today as well.
Dude, let's go do it. All right. Thank you, Paul.
All right. Talk soon, guys.
Hey. All right, guys, let's go shred. Later, Paul. All right, let's go do what we do, folks. Hey, look, I just want to have Paul come on, give some market thoughts here. We're opening up at the 600 spot. We really need to flush this out. I mean, if you can flush out this 598 today, I think that kind of maybe sets us up for something where we can whoosh down. And then there's an actual shot that maybe NVIDIA can actually save the market, right? If we lose this, then we're coming down to this, right? And then that's like, now we'll set up a true kind of like oversold bounce at some point. We're not necessarily there yet, but we're getting a little bit closer. So watch this 600 mark. Let's see, like if we lose this piggy, I think, if we lose this piggy, I think you never know with NVIDIA. They always cook the books on those kind of things, right? But like this is the wrong market to, even if they beat expectations, they better come in, right? They're going to have to come in and do a lot more than just beat. So you got to be a little bit careful. Yeah, Lemur, everything has been on the fritz today. So I figured, get it out that way. Let's dig in. What are you guys watching here? Yeah, CoreWeave, I think, is probably too oversold at this point for us. I would prefer something a little bit less. BMNR, I'm actually watching BMNR for possibly a bounce off this 200-day moving average. If we get a flush out in Ethereum, I want one more flush out in Ethereum where like you just that one nasty wick, and then that one nasty wick, and then I think we'll be kind of good. And if that happens, then I think BMNR, we can get this thing at the 200-day moving average. You get a 1 or 2 day bounce. It's it's a turd, right? So is it like something you invest in? No, like, right, we're looking for kind of a reflex bounce, like kind of like, remember on Friday we were like, hey, if Oracle tests the 200-day moving average, right, we'll have like this reflex bounce, and it bounced 15, 16 points, right? Just, it doesn't mean it's going to keep going up, but right, it's like a momentary kind of bounce. And I think we can play that. Netflix looks like a short for the most part. Also, Rahul, I forgot to come back to you on this, right? I mean, you don't have really any semblance of any trend on this. And it's got, if you really look at it on a more zoomed out way, it's got a lot of room to fall. Like if it loses all this, if it loses all this, you got a lot of room to fall. So I don't know if it's like a short today, because it's been down 4 or 5 days in a row. But, I think that overall it's a pig. Now, this one I'm interested in, right? I don't know what the news was on this today, but, oh, yeah, you got antitrust, blah, blah, blah. But you have a spot here on Microsoft that, like, if you lose this, I think we could shred it. How I personally would play this one, I would need a pop in Microsoft at the opens. You don't want to like, chase it down. It's ATR 10 points. It's down, 10 points, right? But I would think like, we would probably like, we could do the, like say 485 puts or something like that. I think those could probably shred. We could really, you don't want to go more than, because it's what, Tuesday? You don't want to go really more than 1 day's worth of ATR for a Friday expiration. If you go a week out, you could do 2 days worth of ATR. But otherwise, 1 day's worth of ATR is about all the shredding you can do. Good. Da-da-da-da-da, bum, bum. My man Lemur, it's good to see you, buddy. Yeah, I'll get that for you. Hold on. Yeah, 485. The problem is that you're already gapping down with such a bad ATR. So, we may even do like a 490 or something, right? 490. I don't want to go too far, knowing that sometimes these little gappies, for these little gappies, it's a little bit tricky. But we need a little bit of a pop on this. I think we'll be good to go. If we're looking at some of these other kind of big ones, I personally, I don't trust this Google breakout. Like I can't do that. Apple looks like a fader, probably on the green to red today. Now, look, one thing to just be mindful of when the markets, whenever everything looks like a fader, right? That's when you often will get like get a pop in the market. So you do want to be somewhat careful, right? That like you're not just shitting all over the place. So we'll keep an eye on some of this stuff, but like I would encourage you to be open-minded today. I think the market could very well chop a little bit. The market could very well after post morning. So in the morning, we'll probably have some action, and then into the afternoon, while everybody's kind of waiting on the NVIDs and stuff like that for tomorrow, like you may chop around a little bit, but I don't believe it's till tomorrow afternoon. So we should have a decent amount of time still. Does anybody know, is it tomorrow morning or tomorrow afternoon? I'm guessing in the afternoon. But everything else looks like shit. Look, AMD looks like a rollover here. Palantir looks like a rollover. And that's my worry. When everything looks like a rollover, you've got to be real careful. I've been waiting on this for quite some time too. Let's see what's up. Good. What are we missing? Hell yeah. Layla. Yeah, shorts, that was like kind of the, like even Palantir lately, like, in the morning, it's been a fighter. And then right at the end of the day, midday, they've been doing better. Do be mindful of that. Like, even something like a SanDisk, it's been popping up every day and then just rolling right over. Oh, yeah. Layla. All right. Dude. Yeah, we'll see. Let the thing pop through, and then we'll see kind of like what's up. Hey, on the other side of things, we do have a couple. We do got a couple of these. We've got a couple of these little biotech bombers that are going. So if you really want to, get a little, look at the fucking range on this thing. Not my particular flavor when the market's like this, but you do have a couple of these little bombers that you could trade. Yeah. So look, there's a little pop in Ethereum today. And even Bitcoin's got a little bit of a green too. Not much, but might be something to keep an eye on, because sometimes these have been tells. When a Bitcoin's been taking a shitter, it's been a little bit of a tell sometimes, because you're like, fuck, like it kind of leads the way with all the rest of the spec stocks. So I would keep an eye on that. Like I said, I think, if Ethereum does have a big pop, we try this BMNR. It's such a slut, but it's, right? It's like MSTR, where you're just like, fucking like an endless pit of despair. Dude, MSTR was, 350 bucks. Yeah, so if this, if these do bounce, like CLSK is sitting right on support here, you could do something like that. Wolf is in no man's land, kind of in no man. To me, these look more bear flaggies. I think CLSK is at least at a good spot. They're in such weird areas here. I mean, this is like, guys, what you saw of recent was a once in a multi-year thing. Hopefully everybody fucking banked. But that is not the norm. Hopefully everybody banked, but that is not the norm to see so many stocks do all of that. So just got to be mindful of all that as you go through. All right, let's go have some fun today and let's go do what we do, which